Hi, everyone, and welcome to the WSBA Crypto Roundup for March 1st, 2024. We're coming to you from various locations, and we're excited to cover all of the news of this week. With me today, I have my amazing colleagues, Ron and David. And before we begin, we'll just say nothing that we say on this podcast, as usual, is legal advice, investment advice, tax advice, accounting advice, really any kind of advice. But we hope you'll find it interesting. And the statements that we make and the opinions that we express are our own. They are not necessarily the opinions of our employers or of the Wall Street Blockchain Alliance or of any other person or entity. Hi, everyone.
Oh, goodness. Well, it's good to see everybody.
Yes, good to see you both. And now I'm feeling the brunt of the cold that you guys have been dealing with this winter. So it was good to see you the other night at the Players Club. So it's great to catch up.
Good to see you both as well. Josh, lots in the news.
Absolutely. I don't even know where we can begin. Where do you guys want to kick off from?
I'd love to dive into a little bit of on the legal side, not being a lawyer, but I was really fascinated by Krakens Motion to dismiss, which, and I'm sure the two of you parsed through that pretty deeply. I think if I understood it, it rehashed a lot of what prior motions to dismiss had put forward, but it also really dove into this idea that the regulator, the SEC, is really staking out territory that it shouldn't, and it's making claims, but it's not making claims of things like fraud or investor harm. Am I misreading that? It'd be interesting to see your perspectives on it.
So in terms certainly of the statements that have been made or the arguments that have been made in certain of the other major cases out there, I think absolutely they've brought them back. Many people are saying that this is yet another possibility of where we could end up with a circuit split, right? Because we've now got Binance in one circuit, we've got the Coinbase case in one circuit, we've got Kraken in another, and that ultimately, maybe depending on how the decisions come down, maybe this makes it all the way to the Supreme Court. And I think for that reason, I think it's super interesting to see how in various cases, like many cases, the questions like the major questions doctrine, things like that being re-raised. And yeah, yes. David?
No, it has a legal soap opera feel to it. As the district turns, I think there are some things to look at. I feel like the Kraken and Coinbase cases are more on point in terms of market structure and classification. I think the Binance case, when you think about it, boils down to extraterritoriality and sort of the court's view that Binance was sort of aiding and abetting U.S. citizens to access the platform, even though they were not allowed to have U.S. Citizens on their platform. So I think of them very differently. I think one of them is more of, an AML KYC kind of CFTC type issue, whereas I feel like Kraken and Coinbase are at the core of classification of tokens, market structure, and how digital asset exchanges should be operated. So I could see a world where if Coinbase gets a positive decision and Kraken gets a positive decision, that in and of itself wouldn't rise to going up to the Supreme Court. But I could see also just with different districts ruling in different ways that ultimately it rises up to the Supreme Court.
David, Josh, one of the things that, again, that's always fascinating to me is the impact that these different district courts have. There's this idea that, some fifth district, I could be wrong, might be much more amenable to this getting raised up as a major questions doctrine. Like, will that continue to be the soap opera, David, that you kind of alluded to there? Like, what's that kind of outcome? And that's not a quick process either, correct?
No, look, these are really, although I think some of us think that the classification of tokens issue is not as thorny as we have, really prescribed views on that. Whether it is a major, fits into the major questions doctrine, this is almost a $2.5 trillion business now. Like, this is starting to gain momentum. And, the commission in the past said that, it was a rounding error, but I guess at some point is $2.5 trillion a rounding error? And so one court may view it one way and one court may view it another. So, I think it's really, what we're really benefiting from is really some solid legal work being done by the amicus filers, by Coinbase, by Kraken, and it's really giving a 360 view of these issues. And so I think it'd be very interesting to see what the courts have to say, and what will happen in the Kraken case. And for those people who don't know, Payward is the corporate entity for Kraken. So if you see that on the pleadings, it's one and the same.
Yeah. And by the way, I just want to say I agree with David about the soap opera aspect, but also just some things make more of a documentary and some things make more of like a psychological thriller. And so I would distinguish it that way as well. No offense intended to any person, entity, anything else. But when you read the allegations against Binance, as David said, it had a different flavor to it than either Coinbase or Kraken. And certainly Kraken went out of its way, Ron, as you noted, to say there are no allegations of fraud. In fact, they said that very plainly. And also, I think what is interesting is that they went through the argument, and I assume that this will be, the case in a lot of instances, but when they went through and they were saying that the cases that the SEC relies upon in many instances, for example, Telegram, Kick, and more recently, SEC v. Terraform Labs Do Kwon, those are distinguishable and that they're from a different circuit. So it's just, it's interesting that, the litigation chess that's happening, and that really, as we see each successive response or reply or motion, we've got cases that are unfolding in real time and decisions that are coming down in real time, and they're making their way pretty much immediately into these filings.
One of the other things, Josh, David, if I could, again, we're still talking about Kraken, SEC v. Kraken, is, if I recall correctly, the allegation also invoked commingling of funds with little information to substantiate that. And again, I'm not a lawyer, I could be missing something. And if I recall correctly, in Kraken's motion to dismiss, they really don't speak much to that either. And when you look at commingling of funds, that's a big deal. That's the stuff that's, FT level, FTX sort of allegations. Is it not that big a deal in this case, or is there just not enough there to make the discussion happen?
So I think I agree with you. I had the same observation and the same thought. I was like word searching, for different search terms. But I have to suspect, although like everyone knows, I'm not a litigator. I have to suspect that maybe the stance of this being so early in the case, right, that they're really looking at different sorts of issues to try and knock out the case, right, in this motion to dismiss, right, that it is, say, some of these, even if you assume, like, if things are properly pled, right, you assume, the SEC may have, if they've properly pled a claim, that's a different, the question of whether factually there was commingling may be something for a later point, right? Whereas things like the major questions doctrine, it seems like you raise them early or.
Yeah. I mean, also, if there was a finding that these aren't securities, then
right,
the case goes away. Also commingling, we have to be careful when we talk about commingling. A lot of times exchanges use omnibus wallets for each token. So, so be careful when we think about commingling, and it's not they're using an omnibus wallet for each token to hold on behalf of customers. It's really that somehow there might have been a use outside of the customer exchange part of it and used in some other part of the business, those tokens. So I want to be clear on that, because somebody had asked me the other day, well, what, they're not going to have 10,000 wallets just for each, Atom token that they're holding, or whatever, token that they're holding. And so there are use of these omnibus wallets, but they're only used for client accounts. So I
Yeah,
think
and David, yeah, and certainly not implying when you look at the FTX commingling allegations that came out of
yeah.
that, that's actually commingling customer funds, and there are very specific instances. So I'm with you. It certainly it's delineated across different issues around both. I mean, I think the other thing. Go ahead, David. I'm sorry.
No, the other thing I was going to say is we have to remember too in Do Kwon's case, you know, the judge there was responding to, like, what was it, a motion on the pleadings, or it wasn't
Yeah.
a fully adjudicated matter. It was just sort of like in this beginning phase. So again, he had to assume all the elements and most favorable to the SEC when he made his determination. So we have to just remember we're looking at decisions at different parts of the litigation cycle, and you can't always compare the two.
Exactly. And even if you look, for example, at the Ripple case, just for a second, just thinking back, that wasn't dismissed at the motion to dismiss phase, right?
Yeah.
It made it much further after facts had come out. So I think it's probably a pretty high bar, right?
Yeah.
To have it dismissed at the motion to dismiss phase, unless there's just a deficiency in the pleading. I did find while we were just speaking, I was looking at an announcement that Kraken had put out in connect, like post the complaint being filed, where it's interesting. I think the position, at least described in this blog, Kraken.com, in a post called "Kraken Continues to Fight for Its Mission and Crypto Innovation," it says. The SEC alleges that Kraken commingled its own funds with its clients. This is a similar allegation already made of other crypto trading platforms. The SEC cannot and does not allege that any customer funds are missing, nor any loss has occurred, nor does it allege that any loss will occur. The complaint itself concedes that this so-called commingling is no more than Kraken spending fees it has already earned. So that's really interesting to hear. You know, when you hear it that way and you think, oh, it's commingling of funds, if it is, in fact, if we take that to be accurate, which again, all caveats apply. But if that is the case, then you know that looks and feels a bit different.
Yeah, I agree with that. And you know, it's funny, Josh. You hit it right on the head. The name, you know, by calling it commingling, it just has a different, you know, reaction to it than as the facts, you know, are laid out further on.
One thing I want to throw out there, you know, when we look at the landscape of lawsuits, and you know, we all agree and understand the SEC and all regulators have their missions, and we support the idea of things like investor protections, et cetera. But I really think there's this interesting evolution or shift. The three of us have been in this space for a long time, and in the beginning, these kind of SEC enforcement actions would just cower the industry, right? You know, they would settle, they would just close business, and you know, certainly some of them were doing things that were not great, but in many instances, it just really seemed to be very heavy-handed. It seems like the industry is not cowering anymore. Like we've got really deep-pocketed organizations with really powerful benches of legal experts and attorneys that focus on some of this stuff. And it almost seems to have been a bit of an inflection point. It seems like everyone's suing the SEC now. So I'm specifically referencing there was a Texas association and company, I believe, that filed suit against the SEC. I think several state attorneys general have done likewise. What do you both make of that? That was really fascinating to me. Even attorneys general are kind of pushing back on this reach.
I'm going to take the first part of that, and I'll let Josh go into the second part. Look, you know, a lot of the enforcement, for starters, I think we can all universally agree that if there were fraudulent, you know, projects that the commission was going after, like, yes, that's their mission. Like, none of us are advocating for that. I think what you saw was that the commission was going after smaller projects, ones that didn't have the means and the ability to sort of mount a full legal defense to their claims. But now, as they've gone after more mature or projects that are better, you know, financed and have the means to, you know, negotiate and potentially, you know, defend themselves against these actions, you're seeing, you know, the full bore of that, and you're seeing well-funded, you know, projects hiring really sophisticated counsel, and that sophisticated counsel is pushing back significantly with very strong legal arguments.
Josh, what do you think?
So I agree with what David said. With respect to suing the regulators and in particular the SEC, I mean, we see what happened with the Grayscale case and how that turned out, and really how that's been a turning point in many ways for the industry of late, which is really exciting. I mean, and has really breathed new life. Not that there was ever not life, but really has breathed a different kind of life into the whole industry. So I think people have seen that you can succeed in going on the offensive with certain regulators in certain instances. I think the fact if we pair that with findings, for example, by the GAO, right, about SAB 121 and saying it was an improperly passed rule or adopted rule, and then statements from Congress, the various letters and things that have actions that have been taken place with respect to that. I think it's going to be more and more that we may see these moves of bringing suit. I mean, in the case of the Texas entity bringing suit against the SEC, my understanding is that they said something to the effect, don't quote me, that we didn't want to bring suit. We'd prefer not to bring suit against the regulator, but that essentially they wanted to make sure, or they're trying to make sure, that they're not the subject of enforcement actions, that their members aren't the subject of enforcement actions in connection with pre-existing tokens and SEC potential enforcement actions. I mean, one may say, Ron, as you did, years ago, there was cowering and there was a real, fear.
Yeah.
Just said a different way. But I think maybe one of the challenges is that the horse is already out of the barn.
Yeah.
Right? These tokens have now been trading in many cases for so many years, and to be still saying and alleging that certain tokens are securities and yet not have taken things further. I mean, how many times, like, I don't know if you guys agree, but I remember many times with folks thinking like, wow, we're still seeing enforcement actions against this offering, right? It was like the kind of ICO enforcement for years, and we're only now getting to market structure. And even then, the tokens, I just think people are impatient at this point.
I mean, it's certainly been a long time. David, go ahead.
No, I agree. I think, candidly, you can't wait 3 or 4 years to bring a case. I mean, there has to be some, with the Ripple case, if people were being harmed, and I'm saying if, to wait 4 or 5 years, to bring a cause of action, like, it just doesn't feel right. It doesn't, whether it met the actual statute of limitations or not. If this activity was so, hurtful to consumers, then this case should have been brought several years before. So I think that, the commission has put itself in a difficult spot. They've taken a position that courts are not necessarily agreeing with. They've gone about it in a way where, a lot of taps, and it just put itself in a difficult spot. And it's also made a difficult spot for, projects and protocols who want to, be domiciled in the U.S. and want to serve U.S. customers. We can't forget that people are putting capital at stake, their time and efforts at stake, and they don't want to build a product that actually works and is functioning, but then, are not allowed to partake in that activity in the U.S.
Right.
Like, we can't lose sight of that. These are entrepreneurs. These are individuals. It's not just a bunch of well-funded institutions who are funding these things. These are individuals, and they have to make choices that ideally wouldn't be so opaque.
Can I, let me ask one follow on to all of this, and I know we've got other things to cover in the market, but I remember a conversation with an attorney with many decades of experience, and it was several years ago, and he had mentioned that in the aggregate, when you look at all of the regulatory bodies in the United States, there will generally be court deference to regulators on the whole. Has that changed? Is there no longer judicial deference to regulators, or am I overreading some of that?
So what
no one wants to answer that.
No. I mean, look, the Supreme Court has been looking at reining in the administrative state and the abilities of administrative offices to govern. And so, that has sort of been a theme that we've seen in some of the recent cases. And so I think there's a little bit more of a hostility to the view that regulators have all-encompassing authority, and maybe authority that's beyond what's been drafted in their, in the rules. So I don't think it's just a crypto thing. I think we've seen it with other agencies as well. So like challenges to the CFPB's authority to operate,
Yep.
challenges to other,
FTC, for
yeah,
example. Yeah.
So I think you're seeing it across the board, but I think in this area in particular, that view of the courts may be detrimental to the commission's view about their expansive role over crypto.
Yeah, and I mean, for those in the audience who might not be familiar with what Ron is talking about, I believe, Ron, you're talking about Chevron deference and the
Correct.
Chevron doctrine. So the idea is not necessarily that federal courts would defer to administrative agency on the facts of a case, right? But rather on its interpretation of its enabling statute, right? And whether it has authority. And that's where, when we're seeing things like the major questions doctrine, where people are saying or arguing, right? Actually, this is something that wasn't given to you by Congress. That's at least the arguments that are being made. But as to any specific case, certainly, I can't speak for any judges or anything like that, or any individual situation. I think in general that it's the deference is to the actual interpretation of what the statute, what jurisdiction that gives the agency, as opposed to the facts of any case.
And also, and we see this, and Chris, thanks for the comment. Really appreciate it. Thanks for joining in. And for anyone in the audience, if you've got questions for Josh or David or I, please put them in the chat. And Josh, final point on that, you see that in some of the judicial judge renderings when they ask the question, paraphrasing, what is the limiting principle? And that's key to a lot of these cases, I would suggest.
And don't forget Senator Lummis's comment in one of the litigations about, congressional action being taken or being, contemplated, and not wanting the court to sort of usurp that action being, contemplated by, by the legislature. And as we all know, McHenry's bill was resubmitted for market structure, the FIT bill. And again, another thing, you saw the Republicans, approved a CRA regarding SAB 121.
Yep, I was just going to bring that up.
There is a lot of movement in Congress. It doesn't mean that it will happen. And I think judges are cognizant of that as they think about, how they're going to rule on some of these things.
Yeah. Thank you both. And I'm sorry about the noise in the background for the folks in the audience. I don't think it's me, but and I don't think Josh's pet is marching around, so I'm not sure what it is, but apologies for those of you who can't hear us. If we could pivot to one other thing, and Josh, with your permission, certainly David, you and I, we all talk markets quite a bit, and I've found myself being way too fixated on interest rates and the Fed. So David, you and I saw earlier this week the PCE, personal consumption expenditure number comes out, and I believe it met forecasts, which is interesting. And you and I always have this conversation around how will macroeconomic issues affect crypto. What were your thoughts when you saw some of those numbers, the PCE number come out?
It's so interesting because on one hand, you hear like we're at almost a record level of delinquencies on credit cards and things of that nature, and that, the consumers being constrained. And then you get these numbers and it seems to point to the opposite. I always feel that the numbers are a little chunky and then get revised, and it's just very hard to say. I mean, I think we can.
I need to hear more about this, David, just for a moment. I love hearing you guys talk about this. When you say the numbers are chunky and they get revised, just for those in the audience and for me, what does that mean?
So
sorry to stop you.
They'll come out with jobs numbers saying that 200,000 jobs were created in February. I don't remember the exact amount. Then a month or two later, it'll say, they'll announce the jobs for that month. And by the way, we revised up or down by like 50 or 100,000 the jobs for February and March. And so it's not like a margin of error of like 5 or 2 or 5%. They can be huge, deltas, and it just makes it hard to rely on that data. But I think, Ron, the bigger point is that there has been this demand for the ETFs that I think was underappreciated in the marketplace. And, I don't know if it's a function of, crypto had a nice run up into the point when the ETFs were approved, but the demand, I think, has sort of really outstripped anybody's expectations. And so you're really seeing a lot of people who want some exposure to Bitcoin as part of their portfolio.
Yep. And David, when you look at that run up for spot Bitcoin ETFs, everyone does the gold comparison. What was it, 2 years before gold ETFs got to 2 billion and spot Bitcoin ETFs got there in less than a month?
Look, I saw, and I wish I could remember who said this, but this wasn't my idea, but I do think that the ETFs were like Bitcoin's IPO. And, it's just a different flavor. The people who are comfortable with crypto could go on a crypto exchange and buy Bitcoin and hold it. But for those who wanted to wait or wanted the wrapper of a security, the ETFs are like Bitcoin's IPO.
Yeah.
And the follow-through of the IPO is there's a lot of interest in holding Bitcoin, and you're seeing that play out every day in the volumes.
Yeah. And when you see also, like, it recently came out, we're never able to get an agenda put together that captures everything because the news is moving so fast. I believe it was posted yesterday. Morgan Stanley is looking to make available across its brokerage platform, which we know is a ginormous platform globally.
Yeah.
Spot Bitcoin ETFs. And it's interesting when we look at, I think it was Fidelity Canada, I'm probably mixing some stuff up, but the idea of you should have a 1% or 2% or 3% allocation to crypto via ETFs, for example, really points to greater progression across markets.
Yeah, and look, I think a lot of people have said for a long time that when people had access to these products, that they would want, the ability to buy them.
No.
And again, a lot of this comes down to that people just should be able to make a choice. If they want to own these products, they should be able to own them. And if they don't want to own them, don't buy them. But I think the idea that different groups are being limited or segmented away from being able to purchase them, or hurdles are being put up, it's time that these things sort of progress. There have been ETFs in Canada and other places. And I think a lot of people are frustrated that, like, why is the US sort of last to the party? It's sort of like the last piece of pizza in the pizza box, and you get the last cold piece because everybody else has been eating the whole time.
Yep.
So it's just something that I think that's frustrated a lot of people, but at least we're seeing progress.
Agreed.
Sorry. The other thing that's really important is that the mechanisms are working, so that there's a lot of volume coming in, there's a lot of purchases, there have been a lot of sales on Grayscale, but all in all, that things have balanced out. The market's worked in an efficient manner, and the pricing, I have not really heard any pricing complaints about how the ETFs are priced. Nope. So I think this is really important, that this is not affecting, how things work in a normal environment.
Yep.
Yeah, I saw an announcement that BlackRock's Bitcoin ETF is now trading in Brazil.
Mm-hmm.
And, the wildfire spreads in a good way, I would say, but not investment advice. But it is interesting what you're saying about, the underestimation of the appetite. I mean, one has to wonder what this could portend for other types of digital assets beyond just Bitcoin, frankly, beyond Ether and things like that. Like if there were ETFs at some point for other types of digital assets, how much hunger might there be?
I feel Josh pushing us to an ETH ETF conversation.
Well, look, I'm happy to jump into that. I'm a believer that Ethereum should have an ETF. There are, we have the futures already. I think we're going to get a good sense by the end of May of whether one will be approved. It'll be very interesting because, as a proof of stake coin, it is different than, Bitcoin. And, I think that it will be very interesting to see where the commission comes out on this, because I think also, if Ethereum, if it's allowed to go forward with a, ETF, does that sort of change the logic on trying to determine that certain proof of stake coins are securities? And so it's a very interesting dimensional issue we're dealing with here. But I think Ethereum on its own and ETH I would like to see one approved this year, and it's my hope that we'll see one.
One more question there, if I could, Josh, and certainly just weigh in. I not understanding the calendar of it. Can the SEC delay the May decision that I think is on the calendar, or are they out of delays?
Well, they could reject it. So
they could reject it. Fair.
So I mean, I guess it's not a delay. It could be a full outright reject. I mean, look, we could see another court process with regards to the ETH ETF. I think the same arguments regarding structure that Grayscale made, saying that there are futures out there already approved. Why can't the spot be there? But maybe there's counter arguments that the commission might make if it were to go that route.
Yep. And I just want to point out. Go ahead, Josh. Sorry.
Oh no. Point out what you were going to point out.
I was just going to thank XTR1. We're not running live yet on YouTube. The recordings show up there. We will be running live on YouTube in the coming weeks. So thank you for joining. Do stay tuned. Josh, go ahead.
So I agree. Like, I'm hopeful that we will see that as well this year. Let's hope. But I also do wonder, and I'd love to hear your thoughts about this. It's just something that popped into my mind while you guys were speaking. So I don't have like a really thoughts of my own yet. But what would have happened just procedurally if, for example, ETFs, ETH ETFs spot ETFs had been approved pre the merge? Like, what would that have meant? Because I think questions like that, I would imagine, granted, it already happened, but just thinking about what happens if there is some kind of major change like that, and how that might affect not limited to ETH, but just really other digital assets that might someday want to be the subject of an ETF.
You're talking protocol level changes. For the audience, Josh, tell them what the merge was.
At a very basic level, it was moving. Originally, one would mine ETH, right, and it moved from a proof of works system to a proof of stake system with different consensus mechanisms,
which was a significant change in the overall protocol.
Yes.
Yeah, it's interesting.
And ultimately was a success, I would say.
Yeah.
Right.
Agreed.
But it is interesting to think about. I think if you guys have any thoughts about that, I think that's one of the.
One of the things. Go ahead, David. You go.
No, I'm going to say it's complicated. That's what I'm going to say. On a Friday afternoon, I'll say it's complicated.
I want to point out for the audience that David has been public speaking and jetting around the country, so he's probably a little weary at this point of talking about it.
And looking tan too.
Yeah. How do you do that?
Well, I'm a fan of South Florida, especially in the winter, so it's helps you recharge your batteries. But yeah, I've been getting a little color while I've been down there.
That's David driving around in a Bugatti.
Driving around an Uber and Lyft, Ron. But all joking aside, I do think for a couple of minutes we should talk about the markets. We've seen a really large move in Bitcoin over 60,000, and people have been asking me, are we going to hit a new high before the halving in Bitcoin? And I'm curious to know just your viewpoints, Ron and Josh. Like, what do you think?
I suspect. I mean, we touched one market touched 64K, I think, not too long ago, and this is my sentiment speaking about it, David. It's starting to all feel a little frothy to me. And every time I say that, it goes up another 3%. So I'm not sure how correct I am. But, the spillover into the other tokens and the double, triple digit rises week over week on some of them is slightly concerning. I would suspect we'll see some profit taking. And I'm not necessarily speaking about BTC miners, for example, although I think I saw that they're continuing to sell at these price points. It just feels like we've gone up very far, very fast. I would make that same argument, David, for the S&P 500 hitting an all-time high very quickly since the start of the year. But tell me I'm wrong. Tell me if I'm misreading how the markets are moving.
Well, what do you think, Josh?
So I don't really comment on the markets, the prices. However, I will say I thought it was pretty interesting. I saw reported yesterday, I believe it was yesterday, that Bitcoin miners, they're continuing to sell and ahead of the halving. So some have thought that maybe that means they're buying more efficient machinery or other sorts of things, gearing up in preparation. Others have pointed to droughts in certain areas of Asia and places where there are lots of miners. And I have to think back to how you know many were surprised when the ETFs were first announced that it seemed that the miners were looking for liquidity then.
Yeah.
So I don't know what that means for the market. I don't know whether miners also are thinking that things might be a bit frothy right now and they're trying to just get ahead of it. But yeah, that's as far as I can go with my crystal ball. Although David, yours has been very successful of
Thank you.
late, including with your thoughts about ETH being underpriced before as well.
Yeah, well, I appreciate that, Josh. I think that we see this correlation with Bitcoin and the meme coins kind of running up together. And it's an interesting correlation, but they kind of run up together. And yes,
Yeah.
some of them have been really running up. I think we need to look at the lens of where tokens have been, all time versus where they are now. And so while some of the gains feel, larger, I think you have to keep in mind that a lot of these tokens have been at a much higher high than where they are now. And so I think, keep in mind if something's down 80% and then it goes up 50%, it's still down overall from where it was.
Yeah.
So I think that, you do have to keep that in mind. And so some of the gains look a little outsized, but I think people are taking some profits and then moving them, to other parts of the ecosystem.
Yeah.
So like, I'll give you an example, like Solana has had a nice run up, but that's still 50% off its all-time high. So it's just a frame of reference. Also, Ethereum's had a nice run, but Ethereum is still, maybe it's at 3,400 today. That's high was around a little below 5,000. So you are seeing runs up, but they have been beaten down quite a bit. So that's just one thing to keep in mind too.
David, the one other thing I'll throw in there, and you've been talking about this for years, and it's always very sage advice. Look at the use cases for some of these tokens as well.
Yeah.
When you look at what they're doing, what they're building, you raised Solana, there are others. That is a very different conversation than just pop-up token that just happened to appear and is now up 12,000%. That's the importance of some of the analysis, David, that you do.
I think you're on mute.
You can also see that there are a lot of projects now building on, whether it be Solana or Avalanche or some of the other protocols. And so there is a lot more activity going on. And, also you're going to see some airdrops from some of these projects that if you own some, I'm just using Solana today. I'm not picking that for any other reason, but if you own some Solana and then you stake it on a couple of protocols, you qualify for some airdrops, and some of those airdrops have been very valuable. So you're seeing this sort of organic reason to purchase the tokens as well as sort of a market-driven view to buy the tokens.
Yeah. So I guess we're running up against the clock. There's so much to continue talking about. We didn't even touch fully on the Binance plea deal, which is really, really interesting. And I think, and someone correct me if I'm wrong, something like 4.3 billion. Is that one of the largest plea deals in this space, or the largest, or am I misreading what I've seen?
I mean, I think from a fine perspective, it might be the largest. I don't recall one that's larger. But I mean, look, this was negotiated by the parties and, implemented. But
and a different thing, right, David? These are, like we mentioned earlier, these are AML violations versus some of the conversations around securities law that we were having.
yes, these are AML violations. These do not relate to trading unregistered securities. That was not part of the judgment. And look, again, we've talked about the extraterritoriality rules being applied. Now, in this case, it's been alleged by the commission and by DOJ, and FinCEN that Binance was actively encouraging U.S. residents to go on the platform. So it's just interesting if we see cases where companies aren't encouraging U.S. residents to go on the platform, and there are some that are, not agreeing with agreeing the terms of use, but knowingly are American citizens and using VPNs. And will those exchanges potentially be prosecuted or not?
Yeah, I mean, I also think obviously, it's bigger than just this, but this focus on national security,
Yeah.
which many have remarked upon. I mean, this is a perfect example, right? And I think the numbers, as you said, they're huge numbers. I think right now, people hopefully in the industry, although I will just say, folks in the industry, I would say the vast majority, in my view, are trying to comply, right, with
Yeah.
regulations, with rules, with whatever they believe the law is, and they're seeking legal advice, hopefully, right? But I think for a long time, people have held, not everyone, but some people have thought, okay, the SEC, and this goes back to what you guys were saying earlier about the fear of the SEC, the cowering before the commission, thinking about that and maybe deprioritizing to some extent questions about KYC, AML,
Mm.
sanctions, the like, right? It was like a secondary consideration when actually like the threat of jail time and massive fines, that I think what we're starting to see, and hopefully in terms of awareness, is that people have begun to see actually, you know what, FinCEN has, and obviously the DOJ, but FinCEN has big guns,
Yep.
you know,
Yeah.
and metaphorically speaking,
But,
right?
also in fairness, I think that we have to remember that our centralized exchanges here in the U.S., they have money transmitter licenses. They're registered with FinCEN. They have robust AML KYC programs. I mean, leave it up to the states and the feds to decide, if they're sufficient. But these infrastructures are in place in these companies. So I think we should push back against the notion that they're not compliant. It's just more of an issue of, is that the compliance at the state and federal, governments thinks are appropriate? Are the ways they doing it the same ways that they think they should be doing it? But it's not that they don't exist, and it's not that they're not using these tools. It's just a matter of, like in any regulated industry, when you're audited, are you doing it up to the level that the regulator thinks is appropriate?
One other, slight pivot. I'm going to rip up the script on us a little bit. We
Wait,
talk
there's
about
a script? No.
it's literally just a figure of speech now at this point, Josh. We certainly we talk about the markets. We talk about the legal cases that are ongoing. There's also there's a lot of stuff happening in the world of stablecoins. There's a lot of stuff happening when we talk about things like CBDCs. And I think you mentioned some legislative stuff that's happening, David. I think one of them was a proposed law around prohibiting a Fed-based CBDC. So, for the benefit of the audience, we won't go too deeply into it now, but there's certainly a focus on the challenges of stable coins, for example, and keeping their peg, the challenges of what are the legislative things that are happening, and in an election year, no less. So it'll be interesting to see. David, you mentioned the House Financial Services Committee putting forward some stuff for consideration and a vote. Does that go forward? Does it get to the Senate? What happens in the Senate? And by the time this happens, how is an election going to impact that? So there are a lot of moving parts to some of the things that we're talking about, I would argue.
So are you teasing our visit to Washington in April, Ron?
I am teasing our visit. So David and Josh and a contingent of WSBA folks will be on a not lobbying basis visiting Washington, D.C. on April 16th and 17th, meeting with some folks in the legislature, the House and the Senate, and their staffers, hopefully meeting certainly with regulators, and a lovely cocktail reception and some networking in the evening. Looking forward to doing that. It'll be warmer than it is here in the central New Jersey compound. It was 21 when I woke up this morning, David. So it should be warmer by April. Go ahead, Josh.
No, I said, wow.
Yeah. I think it's 30 in Manhattan, Ron. I'm feeling your pain today.
So, David, as we start to wrap up, when you get ready to fly back down to Florida and jet ski outside of the compound on the beach, what's the news you're keeping an eye on for the coming week or so?
Well, actually, I'm headed to California to go to ABA's White Collar Conference next week. So it's be my first time going to San Francisco since the pandemic started.
Oh, wow.
So very curious to see. Look, I think we've all heard commentary about what's going on in San Francisco. So I'm kind of curious to see for myself, what things look like. And then I'm looking forward to, seeing a lot of peers and a lot of practitioners talking about some of the white collar issues. And I'll certainly report back on when crypto comes up and what the view is on that. So no jet skiing, no being on a boat next week, but I will be we'll be in San Francisco. I'm very curious to see what I'm going to see there.
Interested in hearing about it. Josh, I think the helicopter's already brought you to the vineyard here in Central Jersey. What are you thinking about?
So really, I mean, as a result of a lot of the stuff that's happening in the markets, I think, as probably is the case for you guys as well, client stuff has been going through the roof. So I would say, like, while I have grand plans about what I'm going to catch up on reading and what news I'm going to watch, a lot of it really is just real-time launches, real-time stuff happening, and preparation and discussions. And it's exciting. So I think, yeah, I really should prepare before we do this each week about what I'm going to say at the end, because I never have a good answer. And I think the answer just is like,
there's no way to prepare. It's just everything's moving so fast. There's just no way.
Well, I do want to add one other thing, Ron. I do want to give a plug to our good friend Michelle Gitlitz, who I picked her book last night.
Yes.
I had the good fortune of being at. She had a little event for her book release, and so it's called "Reimagining Payments: The Business Case for Digital Currencies." And I am definitely looking forward to reading it. And maybe a long plane ride to San Francisco is a good jumping off point. But I want to congratulate Michelle on that.
Absolutely.
Continued success with the book, and it's on Amazon and all those places where you buy softcover books.
And hopefully we'll be able to have her on one day. I would love to have her talk about that.
Yes, she and I swapped some emails. I wasn't able to join her book party last evening. I heard it was quite a great shindig. But the book is on the nightstand. It will be one of my reading items as well. I'm keeping a watch on the markets, obviously ongoing and continued member work as we prepare. We're doing a webinar coming up in the next several weeks on liquid staking tokens. Josh, David, there's probably an email I'm going to be sending you in the next few hours, but it really is, we're going to have our colleagues in the industry that are all out of TradFi looking at what are we talking about when we talk about things like liquid staking tokens? What are the securities implications for them? And what's that TradFi intersection? What is Wall Street going to do in a world of liquid staking tokens? How might these be made available to their clients? The other thing that caught my eye, and it's, I don't want to end on a sour note, but certainly I think this month sentencing is happening for Sam Bankman-Fried in New York. And when you look at some of the numbers, some people are recommending 100 years based on all the charges. And I believe there was news about supporters and family and his legal team had put forward a lot of information to the court suggesting a much more lenient, quote unquote, sentence. So again, going to jail is not good for anyone, and certainly justice does need to be served. It'll be interesting to see how the court responds to some of this and what kind of precedent that sets, and just hoping that kind of the bad actors are hopefully floating away or being pushed out of the ecosystem. But yeah, no, it's busy as always, and spring is coming, my friends.
Yeah. Yes. Well, and you know what? Now, like, just to build upon what you were saying and maybe have it be like a little bit more positive.
Bring us back to happy, Josh.
Yeah, which is, I think, in November of 2022, wow, was it that long ago already? With the fall of FTX and all of the related turmoil in the market, both crypto market and beyond, right? I think it's really remarkable now that we are truly in, it seems to be a crypto renaissance of sorts, where real moves are being made, not just by digital natives, but also by TradFi, who I think many people may have said, and some did say, after everything that happened with FTX and otherwise, oh, TradFi has receded. It's now back. It's staying away, right? And look, lo and behold, now this is an exciting time. And I think, the Wall Street Blockchain Alliance, it seems like an appropriate time.
It's a good place to be. Is Wall Street eating crypto is the thing I often say to colleagues, and I get a variety of different answers that we'll probably have to address at a future episode. But final comments or questions, David, Josh?
I'm wondering if we're going to have an all-time high next week.
We just crossed 62. We're bumping up.
I think 62 and 65 are areas, of some 62 and a half and 65 have some resistance there. But if we continue to see the volumes we see of buying in the ETFs, it would not surprise me to see a new high this month.
Yep, that is the David Brill anti-Jim Cramer index perspective, which we'll talk about at a future episode. So thank you both, Josh, David. It's always great to see you both. We'll wrap it up there. For everyone in the audience, thanks for joining. We'll be back next week. David will be traveling, David, so you will be missed, but we'll probably have a guest speaker with us as well. We'll leave it there. Have a great weekend, everyone. Thank you for joining us.
Great. Take care.
Bye.
Guys.